You may be hearing people talk about a Trump account or a 530A account, and also hearing that there's a $1,000 government contribution involved. So let's walk through exactly what the account is when it opens and how that $1,000 actually works. A Trump account, formerly called a 530A account, is a new federally authorized tax-advantaged investment account for children. It was created by legislation commonly referred to as the One Big Beautiful Bill and is associated with economic policy advanced under Donald Trump. The account structure is now authorized by law, but families cannot fund one yet. Under the statute, financial institutions will be allowed to begin offering 530A accounts starting July 4th, 2026. That's the earliest point at which money can actually be deposited. The U.S. Treasury is responsible for administering the initial accounts and issuing the detailed rules that banks and brokerages will follow. The purpose of a 530A account is to give children an early long-term financial head start. Money in the account is intended to be invested and grow over many years, then used in adulthood for major life expenses such as education, buying a home, starting a business, or other approved wealth-building purposes. The focus is long-term compounding, not short-term spending. Now let's talk about the $1,000 government contribution, because this is where a lot of confusion comes in. The law authorizes a one-time $1,000 seed contribution for certain eligible children, but it is not automatic and not universal. To qualify, a child must be a U.S. citizen with a valid Social Security number, and eligibility is generally tied to household income. The intent of the program is to target lower and middle-income families, not to provide a blanket payment to every child regardless of circumstances. In practical terms, that means the child's household income must fall below specific thresholds set by the Treasury and IRS. Those thresholds are defined in regulation and guidance rather than in casual conversation, and they may be adjusted over time. In most discussions, the expectation is that qualification will be determined using tax return information, similar to how eligibility is determined for other income-based tax benefits. It's also important to understand how the $1,000 works. This is not cash handed to parents, not a check, and not money that can be spent freely. If a child qualifies, the $1,000 is deposited directly into the child's 530A account, invested according to the account's rules, and subject to long-term restrictions. The money is meant to grow over time and stay invested until adulthood. Timing matters here as well. No one receives the $1,000 before the program officially launches. Even if a child qualifies, the contribution cannot occur until the 530A system is live, which is scheduled for July 4th, 2026. Now, here's a key point that often gets overlooked. You do not need the $1,000 government contribution to open or fund a 530A account. Families whose children do not qualify for the government seed money can still open a 530A account and contribute their own funds once the program launches. Parents, grandparents, relatives, and potentially even employers can fund the account, and it still functions as a tax-advantaged long-term investment vehicle. In that case, the account simply starts without the government seed, so the $1,000 is a targeted boost, not a requirement. It's designed to help families who might otherwise struggle to get started, while still allowing everyone else to participate if they choose. In plain English, a Trump account or 530A is a new child-focused investment account authorized by law, scheduled to open starting July 4th, 2026. Some children will qualify for a one-time income-based $1,000 government contribution, while others can still fully use the account through private funding. And as with any financial tool, the real value won't come from the headline. It will come from understanding the rules, starting early, and letting time and compounding do the work.